Hi, everybody. Welcome to your Colorado Home Advocate Report with your Denver, Colorado native and home advocate, Don Betts. How are you, Don?
Excellent today.
Excellent. As always, information down in the description. Click it, like it, share it, follow it, whatever the kids say. As of my last birthday, Don, I no longer get to do young terms. I get the senior special at Denny's now, so just happy
Okay.
with that. But yes, all the information's down in the description. Please follow it. Please like it. Please share it. We really do appreciate it. Let's jump right in. The markets in general, your metro specifically, you're seeing a little bit of a resurgence. I'm guessing much like Florida and other parts of other major metros throughout the United States at the moment.
Yeah, we haven't spoken about the March March data, and it's almost the end of
Yeah.
April, but we do have two monthly trends back up, although slightly up. So we have 2 months up in median price gains on the average home, and so I'm anxious to see what the data says coming up next week, because I do believe we are going to continue that slight upward trend based on what I see as far as activity week over week. So this time last summer, you and I were predicting that it was going to
Continue on its merry way
continue
on the ground. Yep.
to go down, but it's I think it's bottomed. And the problem is, again, is just inventory. Although we do have some new listing activity, it quickly gets absorbed by going to pending and under contract. Put in perspective, in January of this year, we had an average of 45 days on the market, and now we're down to 7. So in 4 months, that's how much the market has turned in terms of how quickly things are selling.
Well, and that's true of the top 20 metros right now. I don't shy away from it. Everybody has seen what I'm trying to figure out. Are we seeing a lag from the January bump that happened with January, February because of the data that came out when they dropped the rates there, then they raised the rates, and now they lowered the rates again? Or option number two, which is happening in all the markets, which is a lot of these are still cash buyers, correct?
I would say I looked at these stats a couple weeks ago, and we are in general up from about 15% of our transactions that are cash to about 20% now. So there's a little more activity in the cash range. So
And I think that has something to do with it. It's certainly having an effect in New York and in South Florida, Orange County, LA, Ventura. I mean, all the major metros right now are going on this bump, and I don't know what's causing the bump. I don't believe it's a bottom. I believe that there will be metros like Denver that it's very, how do I explain it? My examination of your market seems to be a very even keeled group of individuals by and large, if that makes sense, right? It doesn't really do extreme ups. It doesn't really do extreme downs. It does float up. It does float down, but it generally fits right into a pocket. And once it truly adjusts for whatever we did during COVID, you have a really stable real estate market from an investment standpoint.
I would agree with that. Although, just like everywhere else, obviously last spring was off the charts in terms of what happened as far as appreciation. People buying 10% over list typically.
Right.
Um, um, and we continue to have a good economy, a good job base here. I don't know if you noticed, if you follow Black Knight's market analysis on defaults, and Colorado has the lowest default rate on mortgages in the country. And in fact, nationwide, it dropped below 3%. Uh, so and we're at 1.8%. So, the people are paying their mortgage, and we don't see any real impact of distressed properties affecting the market and bringing it down. It's just so slight in
No,
terms
it's a utopian metro.
Yeah.
It
and
truly
and
is.
and we talk about where are all these deferral programs? When is that going to hit? Where does it show up in the data?
Right.
It's what we're seeing is I'm sure Black Knight is just looking at public records, and I don't know that all of those deferrals are really getting analyzed. Are they?
They're not. Well, no, they're not. It's like saying, look, when I first went out and spoke about forbearance agreements, people, I brought it up in every state that I went through. I go, a deferral or a forbearance is a negative move, or it should be voted as a negative. In the bank, I guarantee loans that took forbearances or deferrals that have not yet made payments would be graded negatively by the bank, but would they be put on credit? And based on what I see, the reason the market is aloft and the reason we're not back to what I think the market should be, which is pre-pandemic, right? Even with supply and demand, that's more about investors and FOMO and interest rates that were 2%. Like there is some really insane things that went on for 2 straight years because of the pandemic between the investors and letting people refinance at 3%. They're not going to sell their homes. So the supply and demand issue makes sense to me. What doesn't make sense to me is an estimated 6 million people with deferrals or forbearance agreements that really still haven't made a payment on the house and not being reported.
Yeah, I'm anxious to see how again we talked about this a couple of weeks ago about the extension of these deferral programs at Fannie Mae and Freddie Mac, and so, but to be in those deferral programs, the way I understand it, you have to start making your payments.
You have to, or show that you have the ability to make the payments.
Yeah. So start making your payments. We'll push it all to the end, and won't charge you any interest on that deferred component. And then, but you got to, you're going to pay it at some point, because when it's going to get paid off when you refi or when you sell. So,
I would think it very frustrating in general trying to predict the market, right? You can't get a really clean number on consumer credit and how those payments are going from Christmas. I can tell you how much there is, but Amazon's not going to, unless they're at a board meeting, Amazon's not going to give up how many people are defaulting on their Amazon loans, period, to the investors. They're just not. So people are playing this long game in what appears on the surface to be a recession. I think Colorado, specifically Denver, is a very kind of neutral city, right? You have all the major teams, you get all the bands that come through there, you actually have all the seasons come through there, and your prices generally are stable. There seems to be enough job. Of all the places to move to, Denver seems to be the best by far right now and most stable.
We have a balanced economy. We're not reliant on one single industry. We have travel, we have energy, we have tech, we have biomedical tech. We have, like I said, just a diverse economy. So we're a little bit, insulated from the ups and downs of any particular industry, and that helps a lot. But the other thing, the uncertainty continues. The perfect example for me is if you take a look at what Freddie Mac is forecasting for where interest rates are going to be for mortgages at the end of the year. They're at 6.4. Okay, which is basically where we are. So Freddie Mac is predicting it's going to bounce up and down right around that 6.4 all the way through the end of the year. Yet the Mortgage Bankers Association, their forecast is 5.3. So over a percentage difference from one entity that deals with mortgages every day to another entity of where interest rates are going to go. So that just tells me that there is a lot of uncertainty in what's going to happen with regard to the economy and all of these miscellaneous factors that we talk about all the time. It's still in state of flux.
I am a huge fan of Freakonomics or outlier type economics that predict things. So the mortgage bankers say we're going to get this thing around 5 again.
Yeah, well, close to 5.
Or close enough. Close enough. You could buy it down.
Enough,
No big deal. What does that do when that leaks out to the investors? Does that inspire them to start making higher cash value offers and keep inflating the market? Because now the interest rates going down in the off season. So do we see a burst in investor money going back into resident? I would hope, because this is really the big question of the day. How's your commercial property doing right now in Denver? Or are you like the rest of the country?
Well, it's I don't think it's as bad as the rest of the country, but yeah, I haven't looked at it for a couple of weeks, but we're at like 14% vacancy rate.
That's not bad.
Which
It's
is
really not bad comparative to most places.
Well, I mean, did you see that in California, what was it, Pacific Investments or whatever, defaulted on a $1.7 billion mortgage package,
Yes.
which is all commercial property? This has just happened. So we're going to see defaults.
Number two market, literally 15 minutes from me. I just watched a video on why nobody will go to downtown LA. So you're talking the hub of their business. There's an exchange down there. Nobody wants to go. Nobody wants to go. Downtown LA is a hell hub.
Well,
that's the number 2 metro.
So the people that are holding those notes, those mortgages, they're going to take it in the shorts. And how does that affect the residential market? Well, it's going to mean that, okay, this is what I predict. It's going to mean that investors that, the money managers at these at pension funds and other entities that have to move their money around, they're going to say, hey, I'm not going to put my money into commercial real estate anymore. Where do I put it? Well, I guess residential seems pretty solid. So if they start buying mortgage-backed securities instead of doing commercial loans, that means the price of the mortgage-backed security is going to go up and their yields are going to go down. And when their yields go down, so do the interest rates. So that would say to me that the Mortgage Bankers Association's prediction that we're going to see lower interest rates is correct.
Yeah. I mean, I worry that the downfall of the residential market is actually going to be the commercial market, which is crazy to me.
Yeah. Well, but haven't we already seen that with these large investors buying up homes?
Yeah.
And how some builders are building new homes, not to sell, but to rent.
Yeah, as they should. I know this here locally in the smaller towns like Covina, they've turned Kmart's into condos. Well, yeah, you can do that in a small town because you're talking in-house rezoning. And if investors are smart, you're buying an entire parking, you're buying 2 or 3 acres, at pennies on the dollar. Keep it tied up in escrow. You go get it rezoned. You turn it into condos, turn it all into rentals, and it cash flows. And that's the game right now. And I've talked to Walker about this in New York. New York's experiencing it as well. Again, the only market that seems to be somehow self-contained away from the rest of the world is Denver. Denver is just this sort of shiny little nugget.
Our retail vacancy rates are still, below 5. So where we know that in some markets, LA and say Phoenix,
Phoenix, New York, Las Vegas, you can go on and on.
Vacancy rates for retail are way up there, but our retail is amazingly not that bad here. So,
And of course, the side note, it's still a great vacation spot. So it's got a back end to the whole thing. I mean, it's just a great of everything that I looked at lately. Yes, South Florida, yes, California beaches. I mean, those are basically obvious explanations. But when you look at long-term, sustainable, reasonably priced, I might add, compared to what the market's doing, Denver is amazing right now, the way it's holding up.
well, the other thing that people don't appreciate, and I do because I was involved in it back in 20 years ago, is that when we built our new airport, is that it's just because it's pretty much all weather and centrally located. We have an incredible distribution hub here for so many businesses, so that the people, the companies that need to sell their products on a just-in-time basis, and they fly out air freight. That business around Denver International Airport is huge. And so there's another aspect of our economy that people don't appreciate, is that we have stuff coming in and out of this state via the airport all the time. And so great warehousing out there. And obviously, like I said, it's for just-in-time type things. The computer that needs a part, the huge Caterpillar tractor that, they need that gear or that bearing or some other part. Boom, it's on the plane, so that's a big part. I'm ranting and going on here, but
no, you're doing fine. I mean,
Yeah.
I can't say enough about it because I do watch this stuff all year. Denver, and not to mention has Red Rock, so you've got that going for you as well.
Jason Isbell next week.
There you go. Click on the description. You can get Don Betts information. Anything you'd like to add, Don?
No, let's just see how those April numbers comes out. Let's talk about it next week. See, because I think that'll, once you have 3 months of good data, then you can say there's a trend or not.